The year was 1956, and a 25-year-old Warren Buffett sat alone in a cramped bedroom-turned-office, scribbling numbers on a notepad. With just $105,000 pooled from friends and family, he set out on a mission most believed was doomed to fail. Who was this quiet young man daring to take on the world of investing? And how did he turn this modest beginning into a financial empire worth billions? This is the story of how a shy boy from Omaha cracked the code of the stock market, outsmarted Wall Street, and became one of the richest men in history. Let's uncover his secrets. The first rule of investing is simple: don't lose money. The second rule: never forget the first. That's it. Those are all the rules. Warren Buffett believes that if you purchase assets far below their true value and diversify your portfolio, you significantly reduce the risk of losing money. It's a philosophy that has served him well, with Buffett reportedly amassing a net worth of over $100 billion. But how did he do it? What was his strategy when so many others fell short? In this video, we'll uncover how Warren Buffett mastered the stock market and became a self-made billionaire, starting from his humble beginnings. Warren Buffett was born in Omaha, Nebraska, in August 1930, just a year after the Great Depression began devastating the U.S. economy. Growing up during such turbulent times, he witnessed firsthand the financial struggles of those around him and quickly grasped the value of money. Fortunately, Warren's father, a savvy businessman, didn't let the economic downturn defeat him. After losing his job at a local bank, he used his modest savings to start a company selling stocks and bonds, ensuring his family's financial stability. As a child, Warren was quiet and introverted, spending much of his time alone with books from his father's library. It was there that he developed a deep fascination with investing and the mechanics of business. Determined to put what he learned into practice, he approached his grandfather, who owned a local grocery store, and asked for help. Warren proposed selling drinks in his neighborhood, and his grandfather agreed to supply him with products. At just 6 years old, Warren launched his first business venture, selling Coca-Cola door-to-door and earning 5 cents per six-pack. He quickly expanded his small operation, adding chewing gum, magazines, and more to his inventory. Within a year, young Warren had built a profitable little enterprise, setting the foundation for his future as one of the greatest investors of all time. By the time he was just 11 years old, Warren Buffett used all of his savings to purchase his very first stock, 3 shares of an oil and gas company called City Service, priced at $38.25 each. Shortly after his purchase, the stock's value dropped to $27 per share. Despite feeling anxious, he resisted the urge to sell and waited until the price climbed to $40 before cashing out. Although Warren made a small profit from his first stock purchase, he later saw the stock surge to over $200 per share, teaching him the importance of patience and long-term investment. Reflecting on that, Buffett said, "I never tried to predict what the market will do tomorrow. My focus is on owning great companies in the right economy for the long haul." These early lessons shaped his investment philosophy. At 14, after his father was elected U.S. Congressman, the Buffett family moved to Washington, D.C. Warren started delivering newspapers for the Washington Post and later took on a second route with the Times-Herald. His hard work earned him $179 a month, equivalent to over $3,000 today. With his earnings, Warren and a friend invested in a pinball machine, which grew into a profitable venture. They sold the machines for $1,200, and Warren used his share to buy a 40-acre farm in Nebraska at just 15 years old. This early entrepreneurial success showed that Warren was destined for greatness. After graduating from high school in 1947, Warren Buffett was eager to dive into the world of stockbroking full-time. However, his father insisted that he attend college first. Following his father's advice, Warren enrolled at the University of Pennsylvania, funding his education with the income he earned from renting out his Nebraska farmland. After earning a bachelor's degree in business administration from the University of Nebraska, Buffett applied to Harvard for his master's degree but was rejected. This setback turned out to be a blessing in disguise. Instead, he enrolled at Columbia Business School, where he met the man who would change his life, Benjamin Graham. Benjamin Graham, an influential economist and investor, became a key figure in Warren Buffett's life. Graham's book, The Intelligent Investor, taught Buffett the value of focusing on undervalued stocks rather than speculating. Buffett became one of Graham's top students and described him as second only to his father in influence. After earning his master's degree in economics, Warren dreamed of working near Wall Street, but he faced a major challenge. He was painfully introverted, and public speaking make him physically ill. Determined to overcome this, he enrolled in a public speaking course, one of his best investments, according to Buffett. Soon after, he was offered a position at Graham's investment firm in New York. Warren accepted without hesitation and began honing his skills in security analysis, learning how to determine the true value of companies by examining their financial statements. This experience marked a pivotal moment in Buffett's career. Although Buffett and Graham deeply respected each other, their investment philosophies began to diverge. Buffett took a broader approach, focusing not only on the numbers but also on understanding how companies operated. He believed that a company's management and leadership should play a crucial role in investment decisions. Graham, however, didn't share Buffett's perspective. He focused almost exclusively on the numbers, balance sheets, financial statements, and undervaluation, rarely considering the management or broader operations of a company. Their differing philosophies sometimes caused tension, especially since Graham was a strict and conventional investor who expected unwavering adherence to his methods, while Buffett's youthful curiosity often led him to question the rules. Ultimately, though, these disagreements didn't matter in the long run. In 1956, after Benjamin Graham retired, Warren Buffett was ready to strike out on his own. During his time with Graham, Buffett grew his savings from $9,800 to $175,000 and gained invaluable experience running an investment firm. At 25, he returned to Omaha and founded Buffett Associates Limited, raising $105,000 from friends and family. Rather than renting an office, Buffett ran the business from a bedroom in his home. He applied Graham's teachings but took it further by targeting struggling companies on the verge of bankruptcy and buying their stocks at rock-bottom prices. This strategy, known as cigar-butt investing, involved purchasing severely undervalued stocks, holding them until their value increased, and selling for a profit, all with minimal risk. This strategy turned out to be a brilliant move for Buffett. Over the next 6 years, his partnership's net worth skyrocketed from an initial $105,000 to an impressive $7.2 million. As his portfolio grew, so did his reputation, attracting more people who were interested in joining his partnership. However, many potential clients hesitated to entrust their money to someone who, despite his expertise, looked like an 18-year-old running the show. From 1956 to 1969, Buffett's partnership delivered a staggering 29.5% compound annual return, outperforming the stock market by a factor of 4. By the 10th year of his partnership, he was managing over $44 million in assets, and just 3 years later, that figure had grown to an astounding $104 million. While his partners were thrilled with their returns, Warren remained cautious as he observed a worrying trend: rising stock prices. In 1969, Buffett made the bold decision to dissolve his partnership, returning capital to his investors. By this point, he had built a personal fortune of $25 million at the age of 39 and was ready to shift his focus to an entirely new venture, transforming Berkshire Hathaway into a billion-dollar empire. From selling Coca-Cola door to door as a child to building a $100 billion empire, Warren Buffett's journey proves that the smartest investments aren't just in stocks, but in knowledge, patience, and integrity. What can we learn from his frugal lifestyle and timeless strategies? Could the next big opportunity be waiting for someone willing to think long-term, just as he did? Let us know your thoughts in the comments. What's your favorite Buffett lesson? If you enjoyed uncovering the secrets of success, make sure to like this video, share it, and subscribe for more stories that inspire and empower. Who knows? You could be next.